Hello everybody, my name is Christian Charlo. Welcome to your market report. Today we're Wednesday, March 18, 2015. Today, folks, the name of the chronicle is going to be the market's reaction to the FOMC announcement. And markets reacted positively to the FOMC announcement today for two reasons. First of all, the Fed took out the word patient out of its statement, and it says that the probability that we have a rate hike in April is unlikely. The Fed also says that even if they're going to raise interest rate, the amount to which they're going to raise interest rate is going to be lower. So this accommodative dovish tone that the Fed adopted actually is creating some optimism in the market, and resources sector are actually surging. The Fed also trimmed its 2015 GDP forecast, and they say that the decision to hike interest rate will be based on how the employment situation is doing in the US. So the Fed is definitely turning in its decision to raise interest rate concerning how the real economy, if I would say, will react after the economic policies of the last few years. So the bullish divergence that I've talked about last week on the last week YouTube Chronicle, though, has it been confirmed? Yes, it has been confirmed on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below. Actually, we talked about this bullish divergence here. And this is the bullish divergence that we have on the SPY, because look at this. This is the MACD histogram. So on March 13, we went actually slightly lower than the bottom of March 10, while the MACD histogram was making a higher bottom. So that was a clear signal of a bullish divergence. Today, we're confirming it more and more after the Fed announced its its dovish tone and not to raise interest rates soon in April. And with this, folks, markets are approaching their top. So there are some strategies you should favor, though. I don't think you should be caught up in being in a buying spree today, but you could buy some positions because there's some interesting one in the resources sector that I'm going to show you today. However, you could go in with some ETF, bullish ETF, instead of being in a buying spree on those stocks, because a lot of them have surged by more than 5%, which increases the loss potential. For instance, on the SPY, if you want to trade a bullish cycle that could continue on the SPY, one ETF you could use is UPRO. On the NASDAQ, to trade this bullish cycle that could continue, one ETF you could trade is TQQQ. And on the TSX, if you want to trade this bullish cycle, one ETF you could use is an ETF like HXU. However, there are some sectors that are actually more interesting than others. For instance, the energy sector on the Canadian side as well as the US side remains nice. It's clearly reversing its downward trend after testing an important support. So one way you could trade that sector bullish cycle is, instead of buying stocks, you could buy some ETF to trade that cycle. And that's what we have done on marketgurus.tv. It's actually favor the bullish ETF to trade the sectors that are more interesting. For instance, in the energy sector in the US, one ETF you could use is an ETF such as ERX on the energy sector, with an exit point below that support, so below 47.84. You close that long positions on ERX, but already surging by 8.35%, which means that on today's bullish cycle, what you have to do is to build up your long positions and not buy as much as you would like. Let's say go with a half position first, and then you might increase your exposure if ever we have the pursuit and the strength of today's bullish cycle that is confirmed. On the gold sector situation, though, even if it's in a bullish cycle in the TSX, we don't like the situation, and we don't think it's ideal to buy some long positions on the sector, because simply the gold sector is negatively correlated to the US dollar. The correction of the US dollar has been the main contributor to explain this increase that we have on the gold sector. But even if the US dollar pursues its correction, we don't think it's going to go far enough until what, 25.50 could be where the US dollar could actually stop. And at this point here, this is where we might expect a rebound. And this will be negative for the gold sector. So even if there's some breakouts such as NEWMONT mining, by looking at NEWMONT mining, look, there's a lot of congestions on today's breakout. So it's a breakout, yes, it's a buying signal, but at 23.48, there's the 50-day, 200-day, and 30-day moving average that meet there. So can we believe in today on a breakout like NEWMONT mining? I don't think so. So this is why for the gold sector bullish cycle, we think it's a sector you should avoid. Now, concerning the impact that it had in the markets, are there some opportunities for day trading and for swing trading? Yes, there are. And on marketgurus.tv that you can have access for free for 10 days, those have been our best picks of the day. For instance, PGN for a nice day trading opportunity, clear signal, one entry point here, one there, and all those points where when the stock clearly got out of a sideways formation. So you had almost 4 entry points and all that, and that stock was recommended on marketgurus.tv. OFFSHORE, another one, clearly breaking out, an entry point here, another one there, and also another one here for OFFSHORE, and the stock kept an upward trend. So 3 entry points on a stock like OFFSHORE in the resources sector. Quart on NASDAQ actually gave a pretty nice entry point. Was not as clear at opening, but finally gave a clear entry point here, another one there on Quart. So that actually has been also another stock that has been active for day trading. Now, as concerning the best opportunity for swing trading, well, I'm going to give you a gift, because on marketgurus.tv every day we prepare the best picks of the day. And today on marketgurus.tv, those are our best picks. There's North American Tinker Shipping and AK Steel Holding. And those are 2 positions that we feel comfortable to hold on for swing trading, which means for the next 2, 3, 4 days and next week. And on stocks like that, AKS and NAT, we all recommending half position. And on NAT, our exit point is at $10. And on AK Steel Holding, our exit point is around $3.90. We expect the stock to reach $4.81, which is the point where we're going to trigger a first profit-taking opportunity on a stock like AK Steel Holding. So overall, folks, yes, markets are rallying. On the SPY, I think this is the bullish ETF you could actually favor. On the NASDAQ, this is the one. On the TSX, this is the one. The energy sector is the most interesting sector. I would favor a bullish ETF to trade that bullish cycle. The gold sector situation, it's not a sector that I would favor because the US dollar correction will not go far. And the stocks you see that are highlighted with an eye, can we take out my picture, please? So we can actually see the stock. No, I want to see the stock, thank you. So those are the stocks, North American Tinker Shipping and AK Steel Holding, that are the best opportunities for swing trading that we have recommended on marketgurus.tv. So that's it, folks. See you next week for your Market Chronicle. You can always follow us on Facebook and on Twitter. And I invite you to also make a subscription of marketgurus.tv for free for 10 days just by clicking at the link below. See you next week.